Hello my fellow traders, and welcome back to another overview over the currency markets. And today we're going to have a look at some economic calendar numbers, and we're going to have a look at the major trends in the market. So let's get started. First of all, I'm here at the NSB website here, and as you might know if you have visited this very splendid site, there's a lot of tools in here. Under the analytics you can find the Trading Central and the economic calendar that we're going to have a look at today. Also a lot of technical analysis. They have a huge educational section here with a lot of webinars and trading videos, trading tools, and so on and so forth. So that is definitely a website worth visiting. There are a lot of free stuff in there, absolutely high quality. All right, let's have a look at the economic calendar here. And you know, if you have followed my videos here, that I am very into looking at this calendar pretty much every single day. And the reason is that even though I am a technical analyst of the Forex market, stock markets and so on, what actually moves the Forex markets and commodities, that is the major news from the currencies. That is unemployment numbers, inflation numbers, interest rate decisions and so on. That can really spark some movement, some trends in the market. And since I am primarily a trend follower, then that is what I'm looking for. So what can we look forward to having? Well, today there's not much that can really move the market, to be honest. But tomorrow there's some Australian dollar news here in the middle of the night. There's a bit from UK, not really something I'm paying attention to, but there is the CPI numbers from the United States. That is the inflation numbers. And even though I don't think they are completely correct calculated, they're changing the calculation all sorts of ways almost every year. But even though they are a bit manipulated, we can see here that on a month-to-month basis, they are actually, well, they are estimated to drop a bit from 0.5 to 0.4%, but that is still around 5% per year in inflation rate in the United States. And I do know that the Fed says it's transitory, meaning that it'll not last that long. But to be honest, they can't keep saying that. They have said that this entire year, and it just keeps being high. And as we know, with high inflation rates, that at some point will force the interest rate up. The interest rate has been going somewhat up. We can have a look at it in a second. But the interest rate has been going up, and when that is going up, the dollar is going up. And we're going to have a look at some increased strength in the US dollar today, and that is definitely because we are, or the market is expecting the CPI numbers here. And on the 24th of September, that is in 11 days, we have the next FOMC meeting. And it is very much expected that Fed and Powell will come out and say that they'll start their tapering now, meaning that they will lessen their purchase of bonds. Right now they're buying 80 billion worth of treasuries each month, and $40 billion worth of mortgage-backed securities, the MBSs. So that is $120 billion they're pumping out into the market each and every month, and they will probably come out and announce something about the tapering, where they will decrease this by maybe 5, 10, maybe $15 billion per month. But they are still buying up, they're just buying up less. But that is definitely something that can move the dollar in the near future. So let's try and have a look first here at the spaghetti chart. As you know, when we're looking at the daily chart, which is actually the one I'm tending most to, because here we can see the larger trends. We can see that we have, let me just put some arrows on here, we have the New Zealand dollar here at a high level, and this is a relative strength chart showing that the New Zealand dollar is actually the one that is the strongest towards all of the other 7 currencies right now at this moment. And you can see it has been declining a bit, but now it is turning upwards. Then we have the Canadian dollar here, And we have the Australian dollar. Let me see, that comes in here. That is the dark blue. So as you can see, they have all been going down. The New Zealand dollar here, the Australian dollar, and the Canadian dollar. But right now they are tipping off. And the reason for that is that we are seeing an increase in the oil prices. And since these three currencies are what is called the commodity currencies, then they are often at least a bit in sync with oil price. And right now the oil price is increasing, both the WTI and the Brent crude, and that is primarily because that there's a higher demand than expected, and then the supply is a bit halted due to that hurricane over in the Mexican Gulf that kind of put a stop to a lot of the oil production over there. And to be honest, I think that the demand for oil will keep rising. It seems like the COVID is kind of getting under control around the world. We can see that the vaccination rate is going up. We can even in China and many countries in Asia, we can see the United States are it seems like they have bended the curve in number of cases, and probably also in a week or two in the number of deaths per day. So I think that the economies will start to accelerate, and that will make the demand for oil a lot larger. Which also means that the New Zealand dollar, the Australian dollar, and the Canadian dollar might be seeing some upturn in the near future. Then we have the British pound. That is the one we are seeing here. It can be a bit hard to differentiate the green colors here between the pound and the US dollar, but this is the pound going up very strong right now. We can also see the US dollar here also going upwards. What we can see is that the euro is dropping. We can see that the Swiss franc is dropping, and we can see that the Japanese yen is dropping. And at least the Swiss franc and the Japanese yen are normally what is considered the safe haven currencies, so that might mean that we can see a bit more or a bit less insecurity and nervousness in the markets, also the stock markets right now. But let's see for that. I won't go into details with the 4-hour time frame. They will change rather quickly, so that time you watch this video, that might be a lot delayed. So let's have a look at some of the charts here. First of all, we can see the gold. And the reason why I'm showing you this is that many people are trading gold, and what we can see is there's a huge negative correlation between gold and the US dollar. So right now, when the dollar is going up, we can, as expected, see a drop in the gold price. So as long as the dollar keeps going up, I think there will be a downwards pressure on the gold, and that is also what our technical analysis tells us. We are in this downtrend. We even had a little intermediate uptrend here that could be traded to the downside when it broke here. All right. When we're looking at the indices here, we can see that the JXY, that is a Japanese yen currency index. Let's just have a look at the weekly and the daily up here, because down here it gets a bit messy. You can see here that the Japanese yen, it is dropping a bit, but has been caught in a sideways channel here. We can see that the dollar index, the DXY, which is the mostly watched here, that is definitely going upwards here. And the question is, how far can it go? I have drawn in a couple of areas here. This is the former top that we also met here. And it is very good at respecting earlier tops and bottoms here. So I suspect that the US dollar at least can gain somewhat more here. And it isn't a good trend, so I would definitely not take a short dollar in any of my pairs. Then we have the pound, the British pound here, and you can see on a weekly it is going sideways, but it has been moving upwards here, also respecting former levels quite well. So I suspect there is a bit more upturn in this if we shoot up and meet this area here. So I would also be careful about shorting the pound, at least right now. There might be some downturn. Then we have the Australian dollar currency, and as you can see, even though I showed you before that it is pointing upwards, It is an uptrend here, have been a bit of a slump here, but I think we'll see some more upturn. Looking at the overall weekly chart, we can see that the oil price has affected the price in Australian dollar as well. New Zealand dollar going upwards, one of the strongest here, as we also saw in the spaghetti chart before. We can see the Canadian dollar has been going upwards, going a bit sideways right now, maybe losing a bit of steam on the daily and the 4-hour time frame. Euro here has met a top, and definitely a very big rejection candle here, a pin bar big with a bit wick in the top here, has been shooting down. So as you can see, I'm very happy with my short euro dollar right now, since I like to pair the the weakest currency short and the strongest currency long. So that is right now euro dollar, definitely a short in my book. Then we have the Swiss franc going a bit sideways here in the index, and at last we have the oil. And as you can see here, this is a WTI crude. We could have shown the Brent as well. It's pretty much the same picture, but as you can see on a weekly time frame, shooting up, shooting up, shooting up, then breaking down here. Yes, this was here in the middle of the summer, breaking down and then shooting up, and I have been a bit wary as to believe in this break up, but right now it seems like the break is viable here. It seems like it is strong. I would like, if I were to trade the oil, I would not trade this break here. I would definitely wait some movement up here, a bit of a retracement to this very strong area, and then a rejection from that. On that, I would definitely be happy to take the crude oil. And it is interesting to see how the prices in the crude is going up, even though, as we know, the OPEC Plus countries, they have decided that each and every month up until New Year, they will increase their production with 400,000 barrels each day. So at the 1st of October, they will increase their daily production with 400,000 barrels. 1st of November, 1st of December, and I think also the 1st of January. So even though they are expanding the supply, it seems like the demand is running faster than that. So very, very interesting. All right. If we're going to have a look at some of the trades I have on right now, let me just show you quickly here. Here we go. As you can see here, I have a short in the Aussie CAD, and the reason why I have that is it has met this very strong resistance area here. We can see that on a weekly chart, but also when we are zooming in, looking at the daily chart, we saw this violent move up, and then we have seen rejection here with some candles with some high wicks on here, and I took the short trade down here in around 0.93. As you know, if you have followed me, I'm going for these long moves down to the next support resistance area, and if it turns against me, well, I'm losing 1R, meaning I'm losing 1% of my account here. But on the other hand, if it moves in the right direction, I am gaining something like 2.5R, meaning 2.5% over the next weeks. These trades can easily run for weeks. It is rarely they run for a month, but 1 to 3 weeks is definitely not unheard of here. So I don't care if this is moving a bit against me here. It can just wobble around a bit, but in a lot of the trades, they simply start to move downwards. Sometimes I get a very significant reversal candle down here, and then I might take it off. But otherwise, if there's nothing very clear in the direction change, I'll just keep it running down here to the next area down here. All right, that was my short Aussie CAD. Then I have my short euro dollar here. Well, on this chart I don't seem to have put my profit target on, but I can do that very quickly because we had the rejection candle up here. I took the candle mid last week with the stop loss up here and a target down here in a way like this. So around 2.7R reward to risk here, and this one is going very nicely right now. I am up around 1 hour on this so far, but that can easily run a while yet. But as you know, I am very bullish on the dollar and very bearish on the euro. This can change, however, when the numbers, when the CPI numbers are coming out tomorrow. That might move a bit around with this. But as long as I am trading on a daily time frame primarily, these news numbers from the calendar is not really affecting us much. All right, I have another short, and that is the Euro New Zealand dollar here. And as you can see, I took out that, I think it was Thursday or Friday here. It hasn't moved too much yet, but it is up a bit. I think 0.3 or 0.4 R, something like that. And I am aiming for that area down here. As you can see, I have actually plotted in from the weekly time frame as well here. And if it reaches that, we have around 2.2 R. So of course they're not all going in my direction. That would be strange, but I usually have quite a good success rate on this. You can go in timing them on a 4-hour time frame if you want to, but yeah, daily and 4-hour, that is the charts I'm looking at mostly. Sometimes a bit of timing on the daily, on the 1-hour time frame. But my feeling is that I'm getting tied too much to the screen, sitting watching the 1-hour time frame. I do like to work with some other stuff as well. Then we have the pound US here, also a short. And yeah, again, I am shorting against the currencies against the dollar right now. So as you can see here on the daily time frame, we have this area here, and we could have waited for the price to get up here, but I got some very hard resistance signs here. First we had the candle here with a very large wick. I didn't take that because I was a bit I was doubting if it were to continue up here, but then it went down, it went up again, and we saw the second rejection here at the exact same level, showing me that there's sitting some really large players here pumping the price down from this area. So when I saw this wick here, I took it without a doubt here. So I am short in the pound US, and that could reach around 3R here. As you can see, I only need 1 or 2 of these trades to pay. For instance, if I have 5 trades on, I only need 2 or 3 trades to hit their targets. Then I am easily in profit. The last trade I have on right now is a long New Zealand dollar, the Kiwi dollar here. And as you can see on a daily time frame, this was a bit of a different trade because I was on a long trade from the area here, but I took it off because I saw some weakness on the 4-hour and 1-hour charts when we came here. But it continued up. So what I just waited patiently for was a retracement down to this area. And as you know, the New Zealand dollar is very strong right now, and it has just helped with the oil going up. And when it came down here and started to shoot up again, I took a long here. It has been a bit in the negative territory, but right now, I must admit, I was a bit nervous about it when we saw, let me just move this a tiny bit here, if I can. Let's remove some of this here. As you can see, this candle here showed that a lot of sellers came in, but I'm just waiting a bit and see. I think it can actually move up. We don't have a natural resistance area, so I just put this on, but I might take it off somewhere up here if it starts to show some resistance. All right. That's all for today. That is the trades I'm currently in. They might go against me, they might go in my direction. Nobody really knows. I'm not trying to predict the market here. What I am doing is I'm trying to follow the big traders in the market. And I think it is the largest 8 or 10 banks. They're pretty much controlling 90-95% of all currency trades in the world. So following these trades where we can see the obvious support and resistance area, they tend to be a good indication of what direction we are moving in. So that's all for today. I hope this gave you a bit of clarity over the market, and I'll talk to you again shortly. Happy trading out there. Take care of yourself and your money. Bye for now.